Hi and welcome to Symax Fintech Weekly Market Insights. As usual, broken into four pieces: what happened last week, just the highlights, what's due this week, the macro outlook, and of course some technical analysis to finish with. As usual, we start with our disclaimer. So trading involves the potential risk of loss of capital. It's not suitable for everyone, although hopefully it is for you. When it comes to leverage, just be careful because you can lose substantially more than that initial investment. Everything we include in here is just purely for educational purposes. We're not trying to provide you with advice, we're just trying to help you prepare, understand the markets better, to help you make better decisions. But of course, if you are looking to invest or trade, that has to be your decision. And before you make that, you should consider your financial situation, your level of experience, and your risk appetite. And of course, on your risk capital, you're prepared, but more importantly, can afford to lose. If you've got any doubts whatsoever, seek independent financial advice before risking your capital. Okay, so when we look at the highlights of last week, we were pretty short on data last week, but there was plenty of central bank speakers, and that included, of course, Powell, which is for me the main one for sure. And again, he just came out that I think he's quite comfortable with where things are at the moment, but he also highlighted the fact, and he warned that there is still a slight possibility of another rate hike if the data demands it, and of course we started to see the yields start to come off a little bit, and of course they turned around very quickly once he came out and said that. And those yields being higher works to his advantage because potentially it's like an offset against another rate hike. So maybe he just said that just to push the rates back up, or the yields at least. So who knows exactly what's in their mind. All I can say really is that inflation is going in the right direction, I guess, but there are still so many hurdles that could just jump up and derail it for sure. So anyway, let's have a look at what came out last week in the way of data. Jobless data was pretty much in line. Initial jobless claims 217,000. It was within 1,000 of expectations. Michigan consumer sentiment was lower though. That came in at 60.4 when the expectation was 63.7, and that was pretty much it on the US front. In Europe there was a little bit more come out. So retail sales were down 0.3% month on month, which is 2.9% year on year. Not desperately bad, is it really? But the PMI composites 46.5, and for services 47.8. So yeah, they're not 50, they're not in growth territory, but for me they're not terrible. I think once they go below 45, then that is sort of massively highlighting contraction to me. But that's sort of no man's land, I guess, to a degree. Not great, but not terrible. And investor confidence came in negative 18.6, which again pretty much in line, I guess. PPI, so one of the inflation data, so that came in at 0.5% month on month, but it's down 12.4% on the year. Moving on to Germany. So German factory orders were actually up, which was a little bit of a surprise. They came in at 0.2% month on month, but that's still down 4.3% year on year. So they're still struggling with manufacturing, that's for sure. Industrial production again highlights that negative 1.4% month on month, when it was expected to come in at plus 0.1%, and that's a negative 3.7% year on year. CPI in Germany came out at 0, flat for the month, and that's 3.8% year on year. So, okay, the target is 2%, so we're not there yet for inflation. The harmonised came in at 3% year on year, so it's still all slowly moving in the right direction. But of course, getting to that magical 2% target that the central bank set, the nearer it gets, the harder it comes to achieve it. So let's have a look at the UK. So retail sales 2.6%, so consumer demand is still there. House prices actually crept up on the month, 1.1%. That does leave them down 3.2% year on year. GDP, a bit of a surprise. There's been sort of all the doom and gloom about the UK, but it hasn't really materialised so far. So GDP 0.2% month on month. It's 0 quarter on quarter, and it's 0.6 year on year. Then industrial production again was flat at 0% month on month, which is 1.5% year on year. Manufacturing was 0.1%, and that's month on month, which is 3% year on year. It's always great to look back at what happened last week, or just in general at this data that comes out, because it does really help to build that picture of what's going on within the economies. And then when we look at Australia, Royal Bank of Australia hiked rates by 25 basis points to 4.35%, pretty much as expected. And in China, the trade balance was much lower than expected. It came in at 56.5 billion when it was expected to come in just under 82 billion. CPI was negative 0.1% month on month, which gives a year on year at negative 0.2%. And PPI came in at negative 2.6% year on year. Would I say that most central banks would like to see that data? They'd probably be frightened to see that data because it's too far in the opposite direction. And of course, China's trying to sort of recover, but it's challenging for them at the moment. And then finally, we've got Canada, where their PMI came in still high, 51.9. So, it's positive territory, it's growth. So that's really good. So just moving on to highlight what we do as a company. Obviously, the majority of you are probably familiar with that, but there's always some new people viewing these. So it's just to give you a little bit of an insight into Symax Fintech as a company. So apart from the YouTube, we provide daily newsletters, which include sort of global headlines, global news, and then as an option, there's fresh chart levels and pivot points each day. Then when it comes to sort of workshops, if people are looking to get into trading, then our sort of introduction to trading is a great one. Trading for beginners. And then for others that are already trading but have got gaps in their knowledge or their trading skills, then we can help you with those as well. We do offer 1-week courses. They can make you feel competent and confident in just 1 week. Does it make you a trader? No, but does it give you the foundations on which to build your trading career? For sure. And if you've got that inner trader, I will find it. And of course, now you have the option of going for one of our new course, which actually includes a free trading challenge attempt as well. And then if you're really serious about making trading your career, then our comprehensive accredited masterclass is the one for you. It's designed to provide you with all the knowledge and trading tools required to navigate any market conditions, and also any asset class. And the next one of those starts on the 19th of June. So you've got a week to register if you're interested. Then trader mentoring, some people don't want to go through courses, but they do need help still, and I can certainly do that. Consulting, we consult to companies around hedging FX and commodity exposure. And then, of course, we provide a mass of educational content that can be to individuals, exchanges, to brokers. And as I just mentioned, if you're looking for that funded account, maybe you're a bit sort of undercapitalized, or possibly you just don't want to use your capital, then there's the opportunity to go through the challenge and hopefully qualify for a funded account through one of our partners, Nordic Funder. If you'd like to contact us, it's info@symaxfintech.com. Any questions you'd like to aim directly at me, it's chris.tubby@Symax Fintech. Sorry, go back to that one, christubby@symax-int.com. Just get so used to the fintech part. And of course, look forward to seeing you in the second part.